This is the average yield that you currently see in money market funds today. It's hovering at around 5%, which is in the higher range of what we've seen over the last 20 years. A 5% return on investment isn't spectacular by any means, but it's also not terrible. And it's actually quite good when you compare that to the S&P 500's earnings yield, which is hovering at 3%. The S&P 500 earnings yield is basically the return on investment of being invested in the S&P 500. Throughout most of history, the S&P 500's return on investment is higher than the yield that you get for holding cash, which makes it more attractive for investors to buy the S&P 500 rather than stay invested in cash. Today, that's not the case, and investors like Warren Buffett are likely seeing this and concluding that stocks aren't a particularly good long-term investment. The yield on cash, on the other hand, looks quite good at the current yield, because when you compare this yield to the rate of inflation, the yield on cash is currently quite a bit higher